Hi friends, how are you doing out there? And I hope you're relaxing on this holiday and you're mulling over what's happening in the markets and collecting your thoughts. And in the tradition of releasing some video on Wednesday which adds to your learning process, today's video you can consider as somewhat of an extension of the recent video that I recorded, what I learned from my past market crises. So I talked about the Southeast Asian currency crisis, the Harshad Mehta scam, the assassination of ex-Prime Minister Rajiv Gandhi. I talked about LTCM, I talked about the dot-com bust and the global financial crisis. Now, there were always, and there always are, warning signs of any crisis. The warning sign is that there is an excess of emotional activity in one side of the market. In which case, in case it's a euphoric market, the excessiveness or the exuberance is on the upside. And if the markets are extremely emotional and it's a bear market, excesses are committed on the selling side. So right now, there are no prizes for guessing as to which side the exuberance or the emotional bias lies. It's to the upside. And if history is any teacher, and it always is a good teacher, as you would have seen from that video, you will see that the weakest institutions or the most leveraged institutions or the ones that are most vulnerable to a pullback invariably fall first. In this video, I'm trying to draw parallels of what happened in the 1997 Southeast Asian currency crisis and what is happening now. This video is not going to give you any short-term trades. It's for people who have the bigger picture in mind, who think like CEOs, who think like hedge fund managers and take positions accordingly. Now, Bill Wang's Archegos Capital just does not go out of the news. On my social media account, I recently put up a post from Bloomberg as to how Credit Suisse is offering up to $2 billion worth of fresh securities for sale because it still needs to recover a lot of money from Archegos Capital. And just when you thought that the selling pressure was over, you're going to see more and more sales coming out because many of Archegos Capital's trades were hidden or masked as swap deals with its bankers. Now, Nomura and Credit Suisse are two bankers we know and who've come forward and talked. There must be many more smaller Wall Street firms that are licking their wounds since they are not listed entities. They are not obliged by the Securities and Exchange Commission to come out there and talk of their losses. So we'll never know how much selling there is. And in my earlier video about learning lessons from past economic crises was that invariably, it starts with blunting the blow, giving out smaller figures, and slowly but surely when the market is accepting that there is a crisis, the figure gets bigger. Now, just when you thought Archegos Capital is the end of the bad news, comes China's bad debt manager, Huarong. Now, this company is in some serious trouble. It manages approximately $260 billion worth of stressed assets. It is promoted by the finance ministry of the Chinese Communist Party. And its erstwhile CEO, Lai Xiaomin, was indicted of bribery and bigamy and was executed in the month of January recently. Now, the problem started when a serious audit started of the books of accounts of Huarong, and it was seen that probably this bad debt or stressed debt manager, the CEO, had taken bribes from participants unworthy of being funded or bailed out and had profited personally, but he had jeopardized the money of the company. Now, all is well if the Chinese government bails out Huarong, which has been the precedent so far. Whenever a Chinese institution, which obviously means government promoted, is in financial problems, the Chinese government steps in, pumps money in, bails it out, and then takes it under its wings. All is well and it's business as usual. But this time around, the Chinese government is refusing to bail out Huarong Capital. That is worrying the markets, and that has spooked the markets so much that the corporate bonds issued by Huarong Asset Management are now trading at between 75 to 80 cents to a dollar. The credit default swaps. Now, you must have watched the movie The Big Short. Dr. Michael Burry and the other guy is shown, Steve Baum is shown as holding credit default swaps. Now, these are bets that an entity whose credit default swap it is will actually fail. Now, because you are betting that the entity will fail, if the entity comes closer and closer to failure, the price of the credit default swap goes up. That means the probability of failure is going, and the guy who's gone long on failure, remember, long on failure, you're betting that failure will happen, will actually profit from it. So the credit default swaps of Huarong Corporation are now at lifetime highs. Not a surprise. But here comes the kicker. Coming up on your screen is a Bloomberg market graphic showing you Asia, Europe and Asia ex-Japan, that is, and the credit default swap situation of these regions. You will find that compared to the other regions, the US, the Europe, Asia's credit default swaps are actually jumping up off late, which means I'm not talking only of China, I'm talking of Asia as a whole, which means billions of dollars of bets are being placed that there will be long winding defaults in Asia. We are not talking of which country because these are credit default swaps on the entire Asian continent. Which means this is not just talk. Talk is cheap, talk is free, a lot of people talk, doesn't make much of a difference. But here billions of dollars of bets are placed in the market that there will be large scale defaults in Asia. Now, what are the comparisons or linear signs which I saw in 1997 in the Southeast Asian currency crisis and currently with what's happening? Number one, there was euphoria. Retail guys thought the party would never end, still continuing. Remember, I'm not telling you to sell. This is not a sell call. Those of you who are linguistically challenged and don't understand the English language much, please understand this is not a sell call. Reserve your comments after thoughtful due process. Number two, small time companies and extra leverage hedge funds start going belly up. Along with LTCM, which was the largest hedge fund at that point in time, a lot of smaller hedge funds started going belly up. Remember, the 2008 crisis also started with the hedge funds of Bear Stearns and Lehman Brothers, etc. going bankrupt. It was only later that the investment bank, the parent body, the umbrella body, declared bankruptcy. So the hedge funds, which are highly leveraged entities, go bankrupt first. And guess what? Archegos Capital was one, highly leveraged. So, number three, bond yields start to fall. In 1997, it started with Thailand, it started with Philippines, but predominantly the red flags were raised by Thailand's national bond yields. Here, bond yields of almost every region are now spiking up. If you think this coincidence is a fluke, I think I can only say best of luck. Then currencies come under severe pressure and they come under turmoil. Now, we have seen how the INR has basically seen a multi-year a highest decline in one single week last week. So that itself is a cause for concern. I beg your pardon. You also see extreme amounts of volatility and bigger price swings. The thumbnail of my recent weekly market outlook video was "Get ready for bigger price swings." Volatility, both at the top and at the bottom, hits new highs because shares and paper is changing hands from weaker to stronger, stronger to weaker, right? Depending on whether you're in a bull market or in a bear market. So extreme volatility is invariably seen at those times. Number 3, money is something that becomes a scarce commodity. Do note how governments the world over are the biggest borrowers from the bond market, which is why they want lower interest rates to fund the fiscal deficits for their stimulus. And eerily enough, some of the biggest economies are printing unbacked currency to fulfill their fiscal deficits and cash flow problems, which means you're again looking at inflation up ahead. Now, those of my friends who were trading through the 1997 Southeast Asian currency crisis will identify what I'm saying immediately, because we felt the pinch on our pockets within weeks of the currencies declining in Southeast Asia. Believe me when I tell you this, as I mentioned in my video, countries went bankrupt. I'm talking of countries, not companies. So, is history repeating itself? I don't want it to. I'm not a harbinger of the bear market. But is there cause for sufficient concern? Always. The minute you deploy money in the market, you have to be concerned. There is an old saying amongst the Japanese traders, many of whom I'm counted, and I'm fortunate enough to count as my friends who I've met over the decades that I have spent in the market. They say that a whale is at the risk of being harpooned. Now, harpooned is a spear which is attached to a plastic rope, which is shot by a spring-mounted gun. As soon as the harpoon ship sees a whale, it shoots the harpoon, ropes the whale inside with an electrical winch. So a whale is at a risk of being harpooned only once it raises its head above the water level. But we as traders and investors are at the risk of a loss the very second we deploy our money. So should you be careful? I would say you should always be careful. Are there red flags? I think so. Is the Huarong problem only $22 billion? I don't think so. It is the typical nature of governments to blunt the blow, initially start out with smaller problems, send feelers to the markets that there is a problem, and then slowly but surely go through the audit and say, look, we think the problem is bigger. Will this problem go away if the Chinese suddenly bail out Huarong? I think so. This particular problem might just go away. But the fact remains that the Chinese are refusing to commit that they will bail out Huarong. This is where the credit default swap market in Bloomberg markets are worried about. And so am I. On this cautious note, I bid goodbye to you in this video. If you like my long-term approach, if you like this historical nuance of the market, wherein we think like hedge fund managers, thoughtful, intellectual players in the markets, subscribe to my YouTube channel, click like on this video, click on the bell icon to receive alerts about fresh videos being put out here. In the comments section, let's keep the lines of communication open. I'd love to hear from you, and help me reach out to fellow like-minded investors and traders by referring my video to your family and friends. Friends, here come my contact coordinates on your screen. I would love it if you would connect with me. We'll get conversations going, help each other become better traders. I wish you a profitable time ahead in the markets. Thank you for watching my video. Take care. Bye-bye.